Okay, welcome everyone. Let's get right into the stock market technical analysis. We're going to just, check out what we got going on today. Look for some, trade setups, trade ideas, and we'll wrap up. So if you guys are new, drop me a thumbs up, leave me a comment. If you've been with me a while, let me know how I'm doing. Constructive criticism or feedback is fine, as long as we're keeping it, positive. And that's it. So let's get into the charts. So triple Qs. All right, tech sector. All right, so let's see. What we got going on is we've got this bullish falling wedge pattern. We broke out, all right, the other day. And now we've been backtesting really the last couple days. You can see we're just backtesting this trend line. And that's really it. That's kind of support right now, at least for the short term. The buyers are holding on to that to step it up and bid it. Now we have resistance right here at 267.50 roughly. You can see that's kind of the low here, and then we kind of held right there, and then it's been resistance, all right, and it's been holding as resistance so far. And we're just tight, we're just trading in this really tight range in terms of this downward trend line and resistance, and that's the range. That's it. So I need to see. If it breaks to the upside, then that's probably going to mean we're going to have somewhat of a rally. Next level of resistance, I think on this one is about 269. Okay, and then we have another level of resistance right here at 275. Sorry, no. So I take that back. The resistance, I don't think we have resistance till we hit about 276. Nothing at 269. And then another level of resistance at 279. Above that, obviously, we have 291. So those are the three levels of resistance where we could rally to if we're going to get a rally. I'm not seeing it right now. And let me give you guys my thoughts on what I think is actually going to happen. And there's no way to really know or be sure. When I look at the daily chart, let me kind of reset this here. When I look at the daily chart, you can see we have bullish divergence on the PPO, and it's kind of there on the RSI. I don't know if I like this one, but you can say that this basically is bullish divergence because we're making a new lower low in price, and yet momentum is kind of moving up, and clearly on the PPO. So we have bullish divergence. It tells me that there's likely going to be a rally here. Okay, the chart is set up for a rally. It has a bullish setup. Okay, I'm not so sure we're going to get the rally, and here's one of the reasons why. One, as I roll out, we are basically testing these June lows. This was the bottom of the drop, and then we had a pretty strong bear market rally. We've faded back that rally. So one, that's just bearish in itself. The fact that we've given back that entire rally, it just tells us that these large rallies we're getting are bear market rallies. So understand that. Rule number one. Two, as I zoom in, and if I clean this up a little bit, we hit it again right here back on the September 30th. We started to get the rally. Everything looked actually pretty bullish. You had this bullish falling wedge pattern here, and you got a breakout or a buy signal right there. All right, it gapped up. That's a breakout. That's a buy signal. You had bullish divergence. Okay. Everything was bullish at that point in time. However, it didn't go anywhere. It just drifted sideways and then gapped down and trapped all that bullish money. The people that took that breakout trapped them. And that's bearish to see that, to have a breakout and then just trap and then just fail and with a gap down and trap and then sell way down. Pretty bearish, I think. And that's what tells me that I'm kind of leaning towards the fact that we don't actually rally here. We crash, okay? And the point being is the chart is set up bullish, so, you're going to be, people are going to be buying and going long thinking they see a bullish opportunity, a bullish setup, and that's where crashes come from. Crashes don't come from bearish setups. When everything looks bearish to everyone, usually that you get the opposite. And when things look bullish is when you can potentially get the crash. And that's kind of what I see. So, it's tricky here because I told my private member group, the charts tell me that we could rally here, but my gut tells me that we're going to crash. So I don't know what to make of that right now. I know it can be confusing to people. So one way to handle if you're undecided on where the market can go, one way to handle it is to lighten up your position. Okay, that's one method for you know if you're just unsure, you don't want to be super heavy either way. So that's one method. Another thing is just go with the larger trend, which is we are in a bear market. So even if we do rally, I do believe the rally should be sold into. Okay, so we're in a bear market. We haven't hit my long-term targets, and I fully anticipate that we will. Okay, and again, on triple Qs, that's 238. That's your pre-COVID highs right there. So I still think we're going to head down there, and I still think, as of right now, we're going to crash down there. We're going to move quickly down there. Maybe 2 or 3 days, and we'll be down there. Okay, that would be a crash. Panic selling, capitulation, the VIX would spike. Yeah, and just everybody would, all the longs, the bulls would throw in the towel and say, I'm done with the stock market, and I think we can bottom down here. All right, now no guarantees we're going to bottom down here, but I think that would make sense if we crash down here. Now if we just drift lower and get a rally from here and then just kind of work our way down there, then I can't say that we're at the bottom. At least the bottom, the near-term bottom, okay? I don't think we're at a long-term bottom. I think the long-term bottom is probably a lot lower. But a near-term bottom where we could get a sustainable rally in this bear market, not a new bull market, but a sustainable rally in this bear market. That might last months, maybe even a year, where we could rally before the next major leg down in the market. Okay, so that's just my, that's my read on it right now. I'm leaning towards staying short after today in anticipation of that crash. Okay, so that's all I got on the triple Qs. Let's look at the SPY. The SPY, it's kind of the same setup. You've got now on the daily for the SPY, you don't really have bullish divergences. We've kind of burned through those, and that tells me that the charts are bearish. You don't have divergences on the daily chart. Now, if I go down to the hourly. Yeah, we're starting to get divergences here on the hourly, okay? So if I look at that, all right, there's a bullish divergence. So the low that we just made today was a divergent low on the hourly, and we could rally here, all right? The chart tells me that there is the potential for the rally, at least in the short term. Okay, so that's it on the charts. The charts tell me there's the potential for a rally, and it's just, again, it just goes back to what I just said. One thing that also is kind of tricky, you got the dollar, so the US dollar, you had a breakdown and a sell signal. So this is a bearish rising wedge pattern. The dollar has been walking up in this for quite a while. We've now broken down and we have a sell signal. So we got it really right there. We're just getting more selling. So the dollar looks like it wants to work its way lower. If I go to the daily chart here, oh, and then also back on the hourly chart, we've had negative divergence right here for a while. So now it's starting to play out. If I go to the daily chart, you can see this is the major trend line on the daily since February. Pretty much all year, the dollar's been climbing this trend line. And so we maybe are starting our way down to that trend line, okay, working our way down to that trend line. And if that happens, if the dollar falls, it's going to give tech stocks and commodities and gold stocks some tailwinds. So you could have a rally based on the fact that just the dollar's coming down. All right. So, again, that's just, we'll just trade the charts as each one is independent, but, they do kind of function together. So the dollar, the triple Qs has a bullish setup. The dollar has a bearish setup and a sell signal. Again, it's hard to be aggressively short because of just the charts, but at the same time, some of the things I see just tell me that we could have that crash. Looking at gold's still battling with that 1680 area. We were under it yesterday. Today it's been proving to be resistance. Here's the hourly chart. You can see it's still proving to be resistance. I think we're going to pop it, but I don't know if it takes place today. Again, if the dollar continues to come down, gold should rally, all right? And that is it. We also have bullish divergence right here on the hourly chart. So that, these are divergent lows, tells me we're going to rally here. If we rally, we recover the 1680, that we're likely going to push back up to this trend line here. This is a downward trend line coming off of March kind of time frame. So this is resistance, and I think if we get back to there, we're probably going to pop it and break out, all right? Because we've already hit it once right here, got rejected. If we get back there, we're probably going to break out. So that's it on gold. A lot, it has some work to do, but those are the levels to watch. Okay, oil. So here's the oil futures. We look at the hourly chart, and we have a sell signal or a breakdown on the oil futures. So you're basically just walking up this trend line here. This high right here where they popped it and made kind of an equal high, that was a divergent high. There's your negative divergence. And we've broken the trend line, all right? So oil is probably going to continue to drift lower, all right? And that's one reason why I like XOM. So let's look at that trade idea. XOM, ExxonMobil, one of the larger oil refiners. We have a trend line support right here. We broke, we did a back test, and we're back below the trend line now. That's the bigger picture, okay? To me, it's starting to trend lower, and it's a sell the rip stock. So today, when I get down to the hourly, you can see we gapped down, they stepped in and bid it. Resistance is right about 130, and they're, it's starting to sell down now. It's kind of drifting lower. Now they could run up and do a back test of the trend line. That's right up here at about 101.24. But there's not much upside, all right? There's just limited upside and a lot more potential for downside here. Going back to the daily, negative divergence right there. So that pop was a divergent high, all right? It tells me we're going to go lower, and it's a sell the rip stock. So I look to either add or, if you don't have a short, it's objective to add or enter, initiate a short on back test to resistance in this stock. So it's going to go down, rally, go down, rally. You basically can add on the rallies, all right? And that's what I see. I think ExxonMobil is likely heading quite a bit lower, so we'll watch this. Snow. So Snow sold down to that first level of support, about 147.66, and we got to bounce off of that. So from my perspective, it's not, right in the middle. So I'd look to short on back test of resistance, which is about 166, okay? And we should head lower from there. That's it on Snow. Qualcomm also had the same kind of look. Qualcomm hit that level of support. If I roll out on the daily, you can see we had a couple reactions right here. So I figured we'd probably at least get a minimal bounce, some sort of reaction there. And sure enough, that is support. That's where we've held so far today. So I would look to short on either back tests of this 123 area or breaks of support. All right, if you can break that level impulsively, it's about 109.75. You start to break down from there and hold, impulsive selling from there, not like a dip below and then a recovery. Then that should set us up for that final move, that final push down to about 94. Okay, First Solar, FSLR. So this one has been a kind of a bear, but here's the thing. Again, we have support about 127.32. We have negative divergence, tells me we're going to break, but each time we break, or at least the last couple days, the buyers have stepped in. So they did it yesterday, we dipped below there, the buyers stepped in, recovered it. They did it again today, we broke down, the buyer stepped in and recovered it. Someone's in there trying to hold this thing up. Until we break that level, we don't have another sell signal. So, I'm out of this one for now because, as long as we're holding this, then don't think, I need a sell signal. I need a breakdown of that 127.50, 127.30, somewhere right there. You start seeing impulsive selling and the buyers don't recover it, then that's your sell signal. And that should set us up for that move down to this gap fill down here at 78, okay? Until I see that, we're just grinding around sideways, going nowhere. So that's it on this one. Okay, that's really all I have for today. So I'm going to get that out there. Guys, if you're interested in learning this as a skill set, check out my stock market technical analysis course. It's priced affordable. It's about 4 to 5 hours of video training. I give you guys a checklist on how to get do your trade setups. It's all broken out into the individual concepts from risk reward analysis, divergence analysis, candlestick analysis, lots of different things. So check that out if you're interested. And then also join the private member group. It's $5 a month. I throw out additional trade ideas, additional market insights. We do the Saturday live stream where you can bring your own individual picks to me and I'll give you my analysis. That's all for the private member group. So check that out. Link in the description of this video for both of those. So check that out. If interested, catch you guys on the next one. Bye.